In today's episode, I'm going to talk to you about two very good flexi cap funds that you can look at for the year 2025. Now, what are flexi cap funds? Usually, there are large cap, mid cap, small cap, and index funds, which basically mean that large cap funds should only invest in large cap companies, mid cap, and small cap. Whereas flexi cap have this advantage where they can invest into multiple different caps, right? Which is either large, mid, small, do their own allocation depending on how the market is moving, and then take a long term bet and a long term view on this. Now, flexi cap, as I said, is very dynamic because you have to keep reallocating your portfolio. So, that is something that is very important for the fund manager to look at. So, let's quickly look at some of the very good performing flexi cap funds, and we will look at from a higher time frame, which is a large time frame. Now we'll quickly go to money control and click on flexi cap funds and look at all the different funds that are there with respect to their AUM. Now, if you look at the AUM, you will see Parag Parikh, HDFC, Kotak, UTI, and so on, and you will keep seeing that there are so many different type of flexi funds that are currently there in the market. Now, if you see the 10-year horizon, 10-year means I know that this fund has been there for a long period of time. It has been there even before COVID. So I want to see, has this given very good returns pre-COVID and post-COVID period to get a real analysis of the company. Now, if you look at the 10-year period filter only, you will see that very few companies come in the 10-year horizon, out of which we see that Quant Flexi Cap is doing really well from a 10-year standpoint. Parag Parikh has given almost 18% compounding over a 10-year period. JM Flexi Cap, Motilal Oswal, and so on and so forth, right? So let us look at three different mutual funds and then understand what might be good, what might be bad, depending on the risk and reward of all of them, right? So let's look at the first one, which is called HDFC Flexi Cap Fund Direct Plan Growth. Now, please understand all the funds that I'm showing you today. This is not a sponsored video. I'm not affiliated with any of these funds. I'm not even a mutual fund distributor. So I have no gain or benefit from showing you these funds. And you can invest however you want, whenever you want, by doing your own research. This is only for educational purpose. Okay. Now, if you look at the HDFC Flexi Cap Fund, the NAV is sitting at 2,000 rupees. The fund size is 64,000, and the expense ratio is 0.77. Now, we will also compare the expense ratio with all other companies, but just giving you this, right? They have a CRISIL rating of 4, and if you look at their last 5-year returns, because I want to see how they have performed in the last 5 years with respect to the benchmark, which is Nifty 500, right, or the BSE 500 or the Nifty 500, we can look at that as the benchmark. Now, if you observe closely with respect to HDFC Flexi Cap, you will see that from the start till the period of July 2022, they were at par with the Nifty 500 benchmark index. So then why would you buy a flexi cap fund and pay 0.77%? You can just directly go buy the Nifty 500 benchmark index at a lower expense ratio and just do an index fund investment, right? But you see, after the July 2022, you will see them branching away from the benchmark index and now start outperforming the benchmark index. So from a 10-year horizon, if you see their absolute returns since inception, they've given 575% returns, which is 5x since 2013. From a period of 10 years, they've grown your money by 5 times. It's not bad at all. And from a period of 5 years, it has gone up by 187%. And currently, if you look at it from a long-term horizon, from a 10-year standpoint, there are currently 6 out of the 17 good companies in the flexi cap. So if you look at me and ask me the question, then I would say that, they have just now started doing well. So you can either give them a shot and check it out, or if you're worried about it, we will go through the next funds as well, right? The second fund we will look at is the Quant Flexi Cap Fund. Now, this showed that they were number one in the rating as per what we saw, right? If I do all and just check from a long term standpoint, you will see a similar pattern arising here, similar to HDFC. What is the similar pattern? That till 2020, till COVID, benchmark index and Quant Flexi Cap were doing exactly similar returns. So that means over a long period of time, if you're invested in the benchmark index, you would have got a better rate of return due to lower expense ratio. But immediately after COVID, you will see that quant usually works very well in a momentum market. As you see in a bull run, quant funds usually do really well, and you will see the blast that has happened and the entire returns that you see. It has done well only in the last 4 years during the bull market, and right now they're actually not doing very well in the last 6 months. But the growth that they've given from this period is just phenomenal, because if you look at the just 5 years growth from 2020, you will see that they've given approximately 300% return, whereas the benchmark has given 125% return. That is a huge outperformance. But for me, if you ask me, if the bull run gets over, then this is something that will definitely fail first. This is something that won't do really well over a long period of time, right? So this is a slightly riskier proposition. If you ask me, if you want a safer proposition, there are other options out there in the market as well. Now, the third fund that we will look at, which is currently the biggest flexi cap fund in the market, which is called Parag Parikh Flexi Cap Fund Direct. This is sitting at 81,000 crore AUM. Expense ratio slightly lower than HDFC, as you saw it, 85 rupees NAV. And if you look at this from a 5-year perspective and long-term perspective, even from a long-term perspective, they've always outperformed the benchmark index. As you can see, they have always given superior returns as compared to the benchmark index, and that is something that is very positive to look at, that it's not just a one off or after COVID. And after COVID, they have definitely outperformed the index even higher, but even before that, they've always been outperforming, and that is why this is the number one fund in India right now, and they have been doing really well. In fact, you will also observe that when the market has fallen quite drastically right now, the fund has not fallen quite drastically, and this is mainly because mutual fund houses, mainly Parag Parikh, kept a huge position of cash in their entire market, right? So that was one of the very smart things that they did, that they kept a huge cash proportion. So when the market fell, they did not fall that much. So they know how to time the market extremely well. So that is something that is very interesting. Another thing about Parag Parikh is that they also invest in US markets. So they have some allocation in US, giving them that slight edge and slight outperformance as compared to, let's say, a quant and flexi cap fund, right? Now, let's quickly look at the shareholding or the portfolio holding of HDFC, and then we will look at quant, and then we will look at Parag Parikh. So, a very simple way to do this is to go to the same page, click on portfolio, and you will see they have 87% weightage in the stocks, and you will see that ICICI, HDFC, Axis, Cipla. You can also do view complete holding, and if you do complete holding, it shows you the entire portfolio here. So you can see that most of their investments, from a weightage standpoint, um, is sitting in the banking sector. ICICI, HDFC, Axis, Kotak, SBI. So most of it is in the finance sector itself. And then they have some increases that they have done. They've increased some stake, as you can see, in the smaller cap companies. Now, if we do the same thing for quant, right, we will go to portfolio. We will click on view full portfolio over here, right? And let's go down and understand. So here you will see that their top weightage is not banks, but their top weightage is Reliance, ITC, Motherson Sumi, which is in the auto sector, which has actually fallen down right now. Bajaj Finance, Adani, and LIC. So their investment portfolio is slightly different from the HDFC fund. Now, if you look at Parag Parikh, let's quickly check Parag Parikh's holding. Now, if you look at Parag Parikh's holding portfolio, you will see that the top is HDFC, Power Grid, Bajaj Holdings, which is the Bajaj Group's investment company, Coal India, very interesting, ITC, ICICI, and Maruti Suzuki. And if you go down, you will also see Facebook, Alphabet, Microsoft, Amazon, and Motilal Oswal, right? So these are the foreign equity that they currently hold. Now, this is very interesting because the foreign equity also gives them the slight edge over the market, and they also have Nifty 50 call options, right? I think this was the 22 December call options that they had, which they had bought right in the past, right? Mostly as a hedging option that they usually do. So very interesting portfolio of all three. And as you can see from a well-rounded perspective, Parag Parikh obviously takes it out of the park and wins the entire thing hands down, and that is why they're the biggest. But if you look at HDFC, they are doing well right now. Quant, which was doing well, is very subject to market, subject to the bull run. So I don't know if they're a long-term compounder or not. But if you ask me, Parag Parikh should be like the clear winner. Again, it's not necessary to have two or three different flexi cap. Even just having one or two flexi cap is good enough. I usually just keep one. Parag Parikh would be a good idea. If you feel that you need two, then you can go with Parag and HDFC because they're the two biggest and they are fighting with each other for that number one spot, right? In fact, there is a very nice image that I want to show you. This is a comparison chart of HDFC versus Parag Parikh, and you will see that in the last 1 year, HDFC has done well. In the last 3 years, HDFC has beat Parag Parikh, obviously beat the benchmark index as well on both front. But over a 5 to 7 to 10 year period, you will suddenly see Parag Parikh is doing well. So as I said, HDFC didn't do well in the past, but right now HDFC started doing really well. So I want to know from your perspective, what do you think is the best flexi cap fund in the market right now? And comment below about it. And if you need any more help, any more questions, let me know in the comment section below. This is me, Shashank Gurpa, signing off. Take care. See you guys. Bye.